Hey everyone, it's Evan here from the Trade Risk on Friday, February 23rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So it was a super choppy week out there, basically Monday through Thursday in the major averages. We did nothing but move sideways, no follow through to the upside, no follow through lower until Friday, where we finally saw a strong start to the session get followed by a strong finish to the session. The bulls taking us out into the close, into the weekend on a positive, constructive note, ending positive on the week. This is the second back-to-back inside week for the S&P 500, so we're seeing that range expansion come into play and something we want to be paying attention to next week as we pay attention and trade right near the past 2 weeks' highs. And couldn't have everything all positive, so the one bullet point on the negative side, the bear side here, is that the number of 52-week highs, the number of stocks making new 52-week highs, is still a bit lackluster in this recovery. It's a slightly longer-term indicator, so I give it some time to sort of expand if we can continue higher. Something to pay attention to and something we'll talk about. So stick around for today's video. Lots to talk about in our weekend market recap video. All right, let's jump in here with the S&P 500, the SPY ETF. You can see we're looking at the weekly chart. We're going to get that big picture perspective right off the bat here. And if we look at our weekly performance numbers, we can see we're finished higher 1.6 points here in the SPY. That's good for a little over 0.5% on the week. And if we zoom in here and take a closer look at this week's candle right here, you can see number one, we did close at the highs of the week here, so finishing strong. Notice also the range of this week. It really compressed. It's really a tighter range after some real volatility and some expansion in these ATRs over the past several weeks of trading. You can see we're starting to narrow down and compress a little bit, which is constructive to see if you want to see this market start to kind of get back to its cool, calm, collected, uptrending self. The second the second kind of point here on this weekly chart is the fact that we spent this week basically above, say, the top 30% of last week's trading. Notice we had that strong 4.5% recovery last week, and we essentially spent this week trading, the shortened week, Monday was closed for the holiday, above trading in the top sort of 30% here of last week's range. That is a good win by the bulls to not give back a large piece of last week's gains. They held us up there. They closed strongly. I think this weekly chart, this weekly picture here is about as constructive as you could picture in your head, dialing back 2 weeks ago, thinking about, the damage here back from the 9th. If you wanted to sort of visualize what would one of the most bullish scenarios be, I think the way this is shaping up here has really got to be it when you look at this weekly chart. Notice also here on the weekly chart that we do have this back-to-back inside weeks in play here, and we do have the highs from the past 2 weeks. 275.32, that was the high from last week, and then the week before that 275.85. So essentially $1 or so above where we closed here on Friday are where the highs from the past 2 weeks coincide. Those are the levels, those are the pivots that we want to see taken out if we are to continue in such strong sort of momentum fashion to the upside for the bull case, which would then kind of clear the path, and we would start to think about that full V-shaped recovery that would get us back to retest these prior all-time highs made back in January. So that's the weekly chart, very constructive there. Let's take a look here at the daily chart. Not as clean. This was a messy week of trading, especially if you're a very kind of near-term trader here. It's very easy to get chopped up. Certainly was not immune to some of that chop myself this week, but hopefully you got through it, and we did see some light at the end of the tunnel here by the way we closed on the week here on Friday, finishing up 1.6% right here at the highs. So let's take a quick step back. Let's look at how this week progressed. We had our midweek video on Tuesday. The Monday we were closed for the holiday, so we did discuss the action here on Tuesday, and it was a little bit something for both. Certainly the sellers had the benefit of the doubt here, dialing this back to Tuesday, because we did see that follow through lower, not meaningful follow through, but still follow through from the bearish reversal on Friday when the sellers started to sell us off here late in the day back on Friday the 16th. We got that follow through to the downside. Still, again, not a lot of conviction, low volume there. And then we spent the next 2 days with some really kind of range-bound choppy behavior. Notice again, Wednesday I think was an interesting day. It was Fed day. We were strong going into the start of that day, into the Fed meeting, through the Fed meeting. We saw an acceleration higher, and then in that last hour of the trading day here on Wednesday, we fell from about almost 275, 274.50 all the way down to close at 270. So we lost about 5 SPY points here in the last hour of trading on Wednesday. And that day right there on Wednesday, I think, was the real decisive day for the sellers to take control of this market. This was a bearish reversal day taking place at a fairly significant spot right at the 20-period EMA, breaking back below this pivot level. This was the bears' fight to win, and they basically dropped the ball on Thursday without getting any follow through. And to the bulls' credit, they didn't get any follow through either. It just sort of kicked the can the next day to Thursday, leaving yet another indecisive day where no follow through. It's kind of like waiting for both sides to blink which one's going to blink first, and ultimately the bears let us down here into Friday, where buyers stepped up, started the day strong on Friday, finished strong on Friday for the first time in the past 4 trading sessions. So are we out of the woods yet? Not entirely, right? We still have, if you look to the left here, you still didn't technically take out the highs here, closed right at the highs here from Wednesday, and still below the highs here from Friday of last week. So we still have, you know, a possible sort of a trap here, if you will, that it could be a nasty bear trap here where, a bull trap here, back and forth. Bull trap here going into the weekend where everybody's happy and potentially stocked back up on the long side into the weekend. A nasty rug pull on Monday could be a complete, reversal of this. I think that would be pretty ugly, and that would be enough of a spark to sort of accelerate us lower. But I would say that seems to be I would put that on the less likely scenario. It's certainly a possibility, but I would say it's the less likely possible scenario here. I think given the way we closed here on Friday with some strong immediate market internal signals, looking at the number of sectors participating, look at the number of short-term stocks that are recovering above some of those fast-moving averages, looking at the AD line, the ticks intraday, I think we saw some constructive action here to finish out the week that looks like we could get some follow-through here into early next week and potentially start a second leg higher from this reversal that all started back on the 9th of February. So that is the bull scenario, of course, and that's to say if we can get some follow through, if we can start to lift out of this range here, I would say we could make a pretty quick move back up to start getting back up to these prior levels that we made back in January of this year. But we need to stay above, say, Friday's lows. If all of a sudden we started to give back the lows here from even Friday. I mean, you could certainly give it more room if you want to say all the way down to, basically 270, 269. If we start to lose this structure in here, if we suddenly lose this structure in here, that is your case to be worried. That is your point at which it would be advisable to tighten up your risk and and understand what positions you own and for why you own them, because you know, basically with the 4 days of structure now sideways that we put in here right around 270 or so, that to me is meaningful enough structure that in the short term, basically saying over this next week, if we were to lose these lows, if everybody that was transacting in here starts to go underwater again, that would be a very sort of bearish development. That would be that rug pull development that we talked about you know, at the start of this daily chart. That would not bode well for future prices. So something to pay attention to. I think it's a good line in the sand. It's a clear line in the sand. So to me, I think you can tactically, not all in, but you can be long here looking for some follow through with a stop in place around here. I think that's an advisable, that's sort of the stance that I'm taking right now, completely knowing that yes, this could be a total fake out. This could be a bull trap here into the week. I think that is, again, a risk, but that is why we have stop losses in place, is to mitigate that risk and control you know, the damage that would do to your account. So for me, for the SPY here, you know, we were short back on Tuesday of this video. I think last Tuesday, or no, even Friday, I think we talked about the SPY short we had on. We were still short on Tuesday. We did flip that short. We took a small loss in the short and flipped it long. So now we do have some long spiders on, and we are looking for some follow through to start off next week. Again, a stop is in place. If we start to lose, you know, that 270 level or so, then all bets are off. I would not want to be pressing any longs if we start again to lose this, if we start to lose these lows here. So that's sort of the way I'm looking at the S&P 500. Volume was a little bit light this week. Probably would have liked to see a little bit more volume, but quite honestly, you know, most of it was spent just chopping around, so some light volume chop isn't all that unusual. We do have, again, that structure that we built out here for potentially a higher low, or for at least us active traders to manage risk against. I think you should be paying attention to that. If we start to get follow through to the upside, I think we can move pretty quick. All the way up to 280 or so does not seem unreasonable. We may not get there in a straight line, but there's a small gap here that we could start to come back in and fill and retest some of this chop back in here from late January. Not totally unreasonable to make that second leg higher if the strength can hold. Finally, I want to just touch on market internals real quick. And we talked about at the start of this video that the number of 52-week highs, the stocks making 52-week highs, still pretty lackluster. And that is a concern. That is something I'm paying attention to, but I do consider that more of a longer term sort of barometer of market health. So I think, you know, in fact, that we could continue to squeeze here in the short term and get, excuse me, all the way back up to these prior highs here. But you know, through this process, through this potential second leg higher, if that scenario does unfold, that is when I'd like to see the breadth start to expand back to the upside, particularly in the number of 52-week stocks making new highs. If that does not happen, if we do find ourselves in a scenario where we are back up here challenging these prior highs, but we still see pretty much a drought, if you will, of 52 stocks making 52-week highs, that to me would be a sort of negative divergence retest. That would be some bearish divergence via market internals that I would be paying attention to, that maybe suggests that, okay, we're back up to these highs. Chances are they're not going to hold if we break out and we don't see accompanying sort of breadth market strength underneath the hood supporting the move back to highs. So a slightly longer term study there to think about. Right now, again, not seeing that much support. The number of stocks hitting 52-week highs, that can change. It's something we'll continue to monitor, and hopefully that can give us some clues as to what's to come over the next week or two, couple of weeks, for the market overall, and thinking about price action and how they're sort of related. So something to think about for now. Again, I think the price action, the immediate sort of structure, and the immediate market internals of AD line, again, sector participation, stocks reclaiming moving averages, those types of shorter, what I would consider shorter term market internals. And I have a whole post on this that goes into sort of the thought process that you can find on the trade risk. Just search market internals. You'll get it there. Go to the Learning Center. I could put a link in this video if I remember to link that up if you want to read more about how I think about and use some of those metrics. So that's everything for the S&P 500. Let's get to some other of the major averages here. You can see the Russell 2000 a little, still a little reluctant here, just like the SPY is in this range. Maybe still more sort of solidified in this range. Didn't make such a strong attempt like the S&P 500 did, but nevertheless still going out here near the highs of the week. You can see all the tails up here for the past 4 days. We're closing right at them. Follow through next week on Monday. I think is going to be very important. That's essentially the theme of this week, I'd say, to get follow through above and out of these ranges that we chopped around in for 4 days or so is going to be very important for that near-term momentum. And for the Russell 2000, again, you can see there's some supply in here right around this 155 level, all from January and the end of really all of December and the beginning of January from of 2018 that we need to break through right around this 155 level. So we'll have to keep an eye on that. And the NASDAQ 100 is leading the charge back to the highs here. You can see this has cleared all of the recent chop here. Strong close, 2% to the upside here in the NASDAQ 100. Slight uptick in volume. The 8 and 20 period have already crossed up and are bullishly aligned here on the daily chart. So the NASDAQ 100 clear leader here, bringing us back towards these highs, and only, as a matter of fact, a couple of a percent off, really less than 2% away from all-time highs here in the Qs. So don't be surprised if that headline comes across next week saying new all-time highs, and everybody's going to say, "Oh, I thought we just had a 10% dip across the markets for stocks broadly," but the NASDAQ here is very much back in control here and leading. So let's pay attention to that to see if, again, we can get that follow through, and then quickly 170, 170, 50 is this target here to retest and potentially make those new highs. So that's the market environment. I think we covered that pretty sufficiently. Let's look at TLT next. We saw a recovery off of the lows, still down on the week, but take a look at the hammer here. So we got kind of two tails over the past couple of weeks here back at these lows, and no coincidence when we zoom back out, take a look at this 116, 116.50 level. This has been some pretty major support going back the past several years here in the long bond market, and you can see we are getting that reaction. We did come into that level quite oversold. We're seeing that bounce off of it. We still have declining moving averages, so the selling pressure, the structure of this market here still favors the sellers, but there's nothing that says that we can't pop back up here for a few days and kind of mean revert back into 119, even 120 or so, into some of these declining moving averages, and then the test will be on to see if the bulls can actually hold those gains for a meaningful amount of time to start to repair some of this damage. For now, sellers have the benefit of the doubt, but some bounce here is not, some continued bounce here should not be too much of a surprise heading into early next week. If we go to metals next, we'll look at GLD. Had a tough week, 1.5% down. You can see an inside week, no follow through off of last week's strong close here. We fell back into this range, kind of treading water right in here around or slightly under the fast moving averages here. And you almost have the workings of a back-to-back inside days here for GLD. It looks like we may have tripped slightly under. Yeah, it looks like we sort of undercut just barely by a few pennies here Thursday's lows, but for purposes here, it's almost back-to-back inside days here, so let's pay attention to it. I'd say over 126.50 or so, I think, would be if we start to surge higher through here, reclaim these moving averages and get a nice pop back above the midpoint of this range here, above some of this other structure right around this 126 level. I think that'd be a pretty interesting opportunity to potentially tactically dip your toe in here, GLD, while it's still on a larger term sort of consolidation. But if you do believe in the overall trend here and a potential breakout from this 129 level, a little starter position here on a upside resolve wouldn't be the most unreasonable thing in the world. So something to pay attention to heading into next week. Silver Talked about the short position we put on here in silver back on Tuesday. We still have this position on. Really hasn't gone anywhere. We did feel a little bit of pressure here on Wednesday. We saw this rally trying to move back up through some of these declining bearishly aligned moving averages, but that ultimately failed. Same thing kind of happened on Thursday. We got that move higher. It failed, and we kind of finished the week back towards the lows here. So to me, it still looks a bit vulnerable. It is taking a little bit longer than I maybe otherwise would have liked. I think if you go down to even maybe some short-term charts here, maybe you get some positive divergences now starting to brew there. So I'd like to see silver break down from this 1550 level sooner rather than later, early next week, Monday. That would be very nice, please and thank you, to get this trade working again. But we'll have to see right now. Again, bearishly aligned moving averages. We saw this impulse leg down. We had this lower high get put in here, or this potential lower high get put in here as it retested this former support, now resistance level. It pushed off of it, and now we're kind of waiting just at a standstill here to see if this mini consolidation does in fact break lower. So for now, still short silver. Next up is oil. USO had a nice week, 3% to the upside. Nice strong continuation week from last week's reversal, holding all of the important levels there on the weekly chart, reclaiming, or in the process of reclaiming and flipping back these fast moving averages back to a bullish stance, bullishly aligned with price above it. So in the short term, bulls very much in control there, and natural gas is still just dancing around here near these lows, really not giving a whole lot of movement. Volumes dried up here, so it'd be interesting to see if we do get a little more excitement. But sellers right now do have the benefit of the doubt, but given the fact that natural gas has been pretty beaten up over the past several weeks now, a little mean reversion here. It's kind of like TLT, where yes, structurally the sellers do have some control here, but given how much it was beaten up here and it is trying to stabilize itself, a little mean reversion would not be unreasonable here heading into next week either. So that's natural gas. That's everything. I think those are all the majors I wanted to cover. Let's take a look at some of the markets that are sectors that are holding up well. We got semiconductors. This was a nice trade for us back in here for the SOXL 3X levered ETF. I think it was like a 10 or 11% trade, and quite frankly, I wish I still owned it and not have scaled out of that so quick, because this continues to work here. We're almost back to highs. When we look at semiconductors, you can see now we're only a couple of percent away. You can see the volume on the retracements here have certainly dried up, but we're above all the fast moving averages there on the weekly chart. We're coming into some supply and structure here right around 106 or so. The chop in here from late January, the chop and pivot high here back from November of 2017. So might finally get a little bit of resistance really kind of surfacing here, so something to pay attention to. But this week, a nice performer for the market overall, helping fuel us higher. Technology kind of hand in hand here with the Qs and the semiconductors. No surprise, technology here very quickly and almost back to highs as well. Very quickly could be making all-time highs, so quite a good amount of strength there as well. Industrials looks pretty similar to the S&P 500, but it's holding up. You can see the 8 and 20 starting to curl back up. Pretty resilient here this week. Didn't give a whole lot back from the progress, from the reversal from last week. That's what I like about the industrials here. So again, follow through. I think next week's going to be important, above $78 or so, and I think we could very quickly be back to testing those highs. So that's something to pay attention to. And then finally, on the upside, financials, same kind of comments here. Did not give much back at all from last week's reversal. Really just held pretty high and tight here. You can see the 8 and 20 period starting, in fact, did cross over here at the close on Friday. So again, constructive behavior. We want to see if we get that follow through out of this chop box for a continued leg high, second leg higher, and potentially retest those highs. On the downside, we got things like IYT, which continues to struggle a bit here. It is making a good attempt. I mean, it certainly had a recovery week. It was up 0.86%, and you can see it is right back to all of these highs here, but on a relative basis on where this is in relation to its highs and some of this previous resistance in here, it's still battling, off of the highs by about 5 or really even 5 or so percent. maybe even a little bit more from its all-time high. So again, I think some reversion here. If we get follow through, that's the magic word again from this week. If we get follow through, I think we could easily see a pop here in the IYT, but on a relative basis, it is still kind of hanging out near the lows. XLE, this was the real underperformer here, but it looks like it's trying to get its act together this week as well, up 1%. It did undercut last week's very tight range, sort of inside week, very briefly, but found support there and then closed right at its highs. So once again, this one has been pretty beaten up over the last couple of weeks in January into February. So a little mean reversion here, a little bounce back higher would not be unreasonable, but take a look at the positioning here on some of these fast moving averages. I would expect $70 or so to be still a place at which sellers would try and test that market again. And then I think finally on the downside, XLU and IYR, some of these rate sensitive sectors here that again have really gotten crushed over the past several weeks, are starting to make a little bit of a comeback, but still on a relative basis underperforming and in sort of the bottom percentile of sectors performance for this week. So that's everything I have. Hopefully you guys made it through okay, made it through this chop. It's the weekend, so hopefully you enjoy it. Thanks so much, as always, for watching, tuning in, watching this video. If you like the videos, do subscribe to our channel. Tuesdays and Fridays, videos just like these go out, and then sometimes in between, some trade ideas. Need to get a little more active on the in-between sort of releases here, but hopefully come March, we can start to ramp that up a little bit more. Have a good weekend. Thanks so much, and talk to you on Tuesday.